And so Bitcoin is down 2.4% and it feels like it just continues to drop like a stone. What is going on? What are the key levels we need to work out for? How low can this go? And should we be preparing to buy the dip? We're going to cover all of that and a lot more in this video. So make sure you stay tuned, hit up the like button. Don't forget to subscribe. These videos are brought to you by me. Yes, our very own course member live streams, ijaz.uk/member. The link's in the description. And the reason you're going to want to join that is because if you were part of our course member live streams, or even if you were just watching my videos full stop, really, you would have not been in for a surprise with this recent fall. We've been covering this literally every single daily candle that has played out. We've covered it on this channel with videos. So make sure you hit up the subscribe button, guys. Literally, as we hit the 48,000 mark, I was waiting for the retest. But when we got the retest, you can go watch my videos. I was very worried about the curling over, and I mentioned we're going to fall into this bigger wedge. Now I'm mentioning that if we fall from the bottom of this wedge, there could be some serious consequences. We're going to go through all of that and more in this video. Now let's take a look at the wider market, because I don't just provide you with chart patterns. I want to show you why things happen and give you the explanation where other people are not giving you the fundamentals which marry up with your technicals. And the fundamentals have been very clear. If you watch any of my videos over the weekend, including the one where I said that I expect some downside and the Fed is going to crash the market, yes, this is starting to play out. We had a really bad red week yesterday across equities. When I say equities, S&P, NASDAQ, Dow Jones. And today, Monday, the markets are opening up red again. The Dow Jones down 0.3%, 0.8% S&P is down, and the NASDAQ 1.12. Now, you're probably wondering, this is a crypto channel. Why are you covering the stocks? Well, we've been doing that for months, because here on this channel, we've noticed it's hugely correlated with stocks, and Bitcoin and crypto is getting more and more correlated with the NASDAQ and with the with the equity markets more and more each day. In fact, the last reading of the correlation coefficient is 0.9. 1 means perfect correlation. This is super high correlation, which is why I continue to bring you these updates. So the market is not happy, and we have to ask ourselves, what is the market not happy about? Well, we know there are 3 key issues going on right now which the market is not happy about. And the first is the one we've covered extensively. It's the Fed coming out last week and being very hawkish, right? Scaring the markets regarding their quantitative tightening. How quickly are they going to hoover up this money from the economy? But also their plans around increasing interest rates. Are we going to see multiple 0.5% interest rate hikes this year? The market is a little bit worried around that. But the other thing on the market's mind is what we're seeing right here. Ukraine Zelensky says tens of thousands killed in Mariupol. Austrian leader to meet Putin, right? This is not coming to any conclusion. It seems to be escalating. Things are getting worse, and things are starting to get, as this headline says, desperate. Ukraine tells US bureaucracy is no excuse for failing to provide critical weapons and ammunition. There's no signs here of this trying to de-escalate, right? All the talks around, remember when they were having their negotiations, they were sending delegations, that seemed to have broken down. We're not seeing progress with that right now, and that is spooking markets. And then the third and final issue is the COVID cases in China, right? With the COVID cases going up, and we know how China are addressing COVID, they're going to pure localized lockdowns. And with those localized lockdowns becomes supply shocks, right? If ports are being shut down, that's going to create a supply shock to the wider economy, further driving up inflation from the supply side, not the demand side. And obviously, interest rates can only improve inflation from the demand side. So very important, whole bunch of geopolitical things going on which we need to understand if we want to protect our investments in crypto. And all of that just to say that none of this was a surprise. I made it very clear to you guys, stay in your high conviction plays, don't chase the green candles. We did not chase any of this on this channel, right? We didn't do any of this buying here. We stopped buying once we came off the bottom of the wedge, and now you can start thinking about nibbling again. But still, I would not be buying the boat right here, because we are at a critical level right now. I would not be doing any more than just nibbling right now. In order to illustrate this point, let's head over to the hourly chart. And on the hourly chart, this is the bottom of the wedge. You're seeing some buying power come in. You can see the candlesticks here. The bulls and the bears are trying to fight for this key level. They know this is a key level. Look at that wick here on this hourly chart. They know they need to bounce from this white line, because if we don't, things could look pretty gnarly. Now, let's talk about the bullish case. The bullish case is we managed to bounce from here. We build to 41659 here on the hourly chart and start working our way back to 43 and then 43.5, something like that, right? Now, the bearish case is we break down from the bottom of this wedge. Let's head back over to the 4 hourly. This is what we don't want to play out. What we don't want to play out is something like this, a relief rally, and boom, we're straight back down, and we start working our way down. Because if we do, and this is something I've mentioned for many, many weeks now, we will then start looking at price targets, as scary as it sounds, as the bottom of the wedge. And the bottom of the wedge brings you to around the 34 to about 35 region, right? So that is what we're looking out for here on Bitcoin, just from a technical point of view. But before then, you have a whole bunch of different levels to bring in some support. Obviously, you have the 40,000 psychological level. If you lose that, then you're looking at 39 and 38 region, where you see supports from this pivot point, and this pivot point comes in at 37,000. So you've got a few key levels before, and then you've got this level here at 34,800-ish before you head to the bottom of the wedge. So there are different levels which we're going to look at, and we're going to monitor these, because these are the pullbacks when you want to be buying, right? If we do play out this bearish situation, you want to be looking at the pivot points and waiting for Bitcoin to pull back to those before topping up on your positions. Now, let's get a tidy chart here. And let's look at the EMA, because what we want to do is we want to pull out the 4-hourly EMA ribbon, and you can see we're super bearish here, right? So all you had happen was exactly which we covered off, and move to the downside, consolidation, bear flag, move again, consolidation, and move again. We spoke about this, guys, over the last couple of days. It was so clear that we were forming a bear flag. This was so very clear, and you can see we moved down to the downside. We're also getting rejected by an EMA ribbon, which is acting as resistance, pushing us down. It's making it very difficult for us to get any momentum to the upside. Now, don't be surprised if you see another relief rally like this, right? But you don't want to be chasing those green candles. If that happens, you know to expect the further move to the downside. The bears in the macro situation, in the bigger picture, when you zoom out, the bears are in control right now. So never try to fight against that trend until you see a reversal. Very, very important. Very important piece of advice for you guys. Not financial advice, of course. We would never do that. Right, now let's look at the daily chart. And on the daily chart, this is where things aren't very nice, right? Because now on the daily chart, you remember we covered this off on 8th of April. We closed bearish on our daily chart after this hard work of getting back bullish and moving to the upside, having a nice move to 48,000. We then came back. We were hoping maybe we could get a bounce around 43,000, because that would have just been a nice retest of the EMA. That's not the case. We've lost it, and we've closed well below, and now we're moving well below not only our 200-day moving average, which is this teal colored line here, but now we are moving substantially below our EMA ribbon. To add to some of the clues and signs that we're moving to the downside, you can see the weekly EMA is below as well. This is not great. Again, we look like we were creating some progress a couple of weeks ago with a green candle. Then we had this doji candle. We thought, okay, maybe it was a bit of a cooling off, but no, we've been sent straight back down. And now the question arises, what are we doing here? And this is where you can see my diagram here. This is what is really important. You can see the macro picture. Sometimes we just need to zoom out of the FUD and focus on our macro picture. And the macro picture is very clear. Okay, let's just focus on what's happened since 2021 started. So we had 2021, we ran all the way up to create a high at about $65,000, right? We then ran all the way down to create our low around summertime of around $29,600. Okay, so that's our high, that's our low. Then later in the year, November time, we created our new high of 69,200, just shy of 70,000, right? Before then coming back down and creating our low at this point of about 32,900. So we've got a higher high, which is great, and we've got a higher low. So this is the definition of an uptrend. So the worrying thing is that after bouncing from here, we've not managed to move to the top of the channel like so, right? We look like we're curling back down. Now, the question is going to be, are we going to curl all the way back down to the bottom of the wedge? Remember the wedge I showed you where I said things could get all the way up to 34, 33, those numbers? That would be coming all the way down to this bottom channel here. That would bring you all the way here for a retest before trying to move back to the upside. If we can turn anywhere before that, then we can continue our move to the upside, which would be fantastic. But the critical thing is we cannot afford to lose this wedge. This wedge, in other words, we create a lower low beneath the 32,900, is not good. We will nullify this gradual upward trend we've been working on Bitcoin for a while. So coming down, getting a test before moving up, that's perfectly fine as long as we create a higher low, as long as we rotate before 32,900. 100. So there you go, guys. The markets are not looking particularly happy right now, and this is going to be this case for quite a while. If you've not watched my video from yesterday, I'm going to link that up at the end of this video for you guys to check out. But it's really important that you understand what the dynamics are in the market, and we're going to continue to see some red in the market. So definitely I would not be deploying all my cash right now. I'm happy to nibble at levels on some of my favorite altcoins and high conviction plays. I would not be having any froth or any weak altcoins which I didn't have conviction in. I ain't got time for that, and I've not had time for that for a good couple of months, to be honest, and I've been saying that to you guys and the course members. But now I would definitely be nibbling and waiting for more of a pullback, because if we break that wedge, we could be seeing more significant downside. And when that fear starts to kick in, we didn't even look at the fear and greed index. Let's see if we can see quickly what the fear and greed index was. 32, notched down from 34 yesterday. But if we lose that wedge, guys, I could easily see this tumbling into the 20s, and FOMO will really start to then, kick in, and the price will start to move to the downside. That's when you're going to get some of your nice limit orders and more chunky buys ready on the dip. So there you have it, guys. Hope you appreciate this blend between technicals and fundamentals. Stay patient, see the course. We've got a bit of a turbulent period coming again between now and the 4th of May. Again, go watch the video. I'm going to link up right at the end of this video. Make sure you go watch that. It's going to explain everything very clearly. As always, consider joining my course member live streams if you like my perspective. Course member live streams are 3 times weekly live streams where we can critique your portfolio. We can talk about macroeconomics. I can tell you what I'm doing in the market, give you some more of my perspective. We can do tokenomics. We can do TA on some of your favorite coins, and a whole lot more. Links in the description, and I'll see you in the next one.